Hello, friends. Welcome to OAWA's weekly update on money and economy. This week's video will be the last one for 2023, and as we near the year end, the Indian stock markets are on an all time high. During the week, the Sensex hit the 72,000 levels for the very first time, and the NSE Nifty 50 also hit a lifetime high of 21,673. Some analysts are calling it the Santa Claus rally, which has been led by expectations of early rate cuts by the US Fed and cooling global inflation. Domestically, the victory of the ruling party BJP in three state elections also bolstered sentiment as political stability will mean continuation of reforms. Inflows into equity-oriented mutual funds in the form of SIPs or systematic investment plans are also at record highs as domestic retail flows remain strong. Added to this, FPI, that is foreign portfolio investors' monthly investment inflows hit a 3-year high during December 2023 with inflows totaling Rs 57,313 crore till December 21st. However, investors should look at current markets with caution, considering that leading benchmark Sensex valuation is now at a 2-year high of 25.2 in terms of trailing price to earnings multiple. Moving on to news on the foreign exchange front, the IMF, that is the International Monetary Fund, has recently reclassified India's foreign exchange regime from floating to stabilized arrangement for the period December 2022 to October 2023 after a review. The IMF reclassification followed the Reserve Bank of India's likely forex interventions, where the rupee traded in a very narrow range, suggesting intervention likely exceeded levels necessary to address disorderly market conditions, IMF said in the report. Indian officials at IMF and senior advisors have responded by saying that IMF staff characterization of India's exchange rate as a stabilized arrangement is incorrect and inconsistent with reality. As in the past, exchange rate flexibility would continue to be the first line of defense in absorbing external shocks, with interventions limited to addressing disorderly market conditions. The rupee traded in the range of 80.88 to 83.42 against the US dollar between December 2022 and October 2023. Moving on to other news on the external front for the Indian economy, India's CAD, that is current account deficit, narrowed to 1% of gross domestic product in Q2 FY24 from 3.8% during the same period last year. In the previous quarter too, it was around 1.1%. The main reasons are a moderation of merchandise trade deficit, stronger inflows from services trade, and higher remittances. However, with the merchandise trade deficit rising sharply in the first 2 months of Q3 FY24 and given threat of rise in oil prices looming, experts see a moderate rise in CAD in the second half, but the deficit would still be within manageable levels. As per analysts, the overall FY 2024 CAD is seen in a range of 1.5 to 1.6% of GDP. Moving on to news on the startup sector, Incred, a new age financial services platform, became the second Indian unicorn after Zepto in 2023 by closing a $60 million Series D funding round. With this round of funding, Incred is now valued at $1.04 billion. The funding round was led by Manipal Education and medical groups Ranjan Pai. The capital will be deployed to shore up the startup's three core business verticals: consumer loans, student loans, and MSME lending. The funds will also be utilized to strengthen its balance sheet, shore up liquidity, and expand footprint. Finally, we end this week's update with a look on how various asset classes performed in 2023. Live Mint recently released their asset allocation quilt, which covers 10 asset classes, and it showed that in 2023, small caps as measured by the S&P Small Cap PRI Index performed the best with returns of 44.9%, and real estate, as measured by RBI Housing Price Index, did the worst. Every asset class performs differently every year, and hence investors should have a well diversified portfolio in keeping with their risk profile. That's it for this week from us. We wish all our viewers a very happy new year and season's greetings. See you in 2024.